I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show. And today we're talking about this question, to lock or not to lock.
Yeah, it's like the Shakespearean question, to lock or not to lock is the question. So we're getting calls and questions from our borrowers and prospects saying, hey, I'm ready to lock. Sometimes it's not with us because they go with the new builder and they got this huge credit that that the builders make them use them for. But they call and they say, should we be locking or should we not be locking? And this is what we're going to kind of answer in this quick podcast.
Okay, so let's look at where interest rates are today. We see the 30-year fix at 6.91, the 15-year fix at 6.47.
Yeah, and the 30-year FHA 6.39 and the 30-year VA 6.41.
All right, so where have we been for the last 2 years? The 30-year fix, we've been almost 3% was the rate. The 30-year fix was at 3% about 2 years ago, back in January of 2022. We saw the high in October 19th, just last year, 2023. And that was right about 8%. We saw the low at December 13th. That was around 6.5%. We were all excited. Rates have gone up to about 7% and now just slightly below.
Which we kind of knew. Things don't happen in straight lines up and down. They always, sawtooth up and sawtooth down. So not that we saw this coming, but this is no surprise to us.
Yeah. And to answer the question whether or not, a customer should be locking or not, well, what we're going to be looking at to really help is, first of all, their timing. The timing is the contract. If we get a contract today and it's closing in the end of April, then there may not be a lot of movement. There actually may be an increase because right now the Fed is anticipating, these are the traders on the Chicago Mercantile Exchange for the futures traders. Mm-hmm. They are showing 91% chance there will be no change. So right now the Fed rate is right in this column right here. 91% chance there's no move. And then in June, June and July, we kind of see that beginning to the chances increase for a 0.25%. So this is where we're at right now, 0.25% rate tier. This is our cut that we would probably have a 64% chance. Well, we have a 64% chance for June. And then in July, what you'll notice is a 49% chance for a quarter, but a 31% chance for another quarter.
So basically, what you're seeing here are these future traders, trying to bet on what they think is going to happen. How does this relate to lock or not lock? It really does. And as I started this podcast off with the new builds are more applicable because they have such long closings. Yeah. So if you have a 5-month closing, 6-month closing, this is when this matrix will come into play. So the short answer is look at where the future traders think rates are going to go. And if you have a home completing in, November, because it's a gorgeous home, and there's, a good chance that it's going to drop 2 times between now and then, why would you lock?
Really, any contract that we get in between now, with a close of escrow between now and June, we would recommend lock. There's no real reason for the borrower to gamble that rates will be going down between now and then, because it's going to be volatile.
So that's March, April, May. So we're talking 90 days. You could have a contract within, which is a really long contract if it's resale. So again, this really applies to new homes.
Yeah. So in the coming weeks, unless this changes, and we'll keep you posted, what will be, where we'll be recommending people to lock. And we usually recommend locking just because borrowers are constantly, it's anxiety feeling.
Yeah. And we also talk about the sleep factor. Even if rates do come down, it would be much more of an emotional toll if rates went up.
Yeah.
So it's safer to lock. And what we're looking for is if they go down between now and when the contract closes, that's good because we need like 5 or 6 more of those periods of reduced rates to happen for them to be down a whole percent. So we need to see a trend.
So the word to the customer is that rates are not coming down at least for the next 60 days, according to the futures traders. Now, yes, they could come down, but that would take some type of catalyst, something happening in the market. Unemployment numbers going up, something in the recession factors,
right?
Inflation
Bad
going
news,
way down.
Bad news is still good news. So again, if we hear bad news, it's going to be good news on the interest rate front.
Right. So for now, we are saying lock in your interest rate and until really June.
Yep. And if it's past June, we think it's not a bad idea to float.
All right, everybody. Be sure to subscribe, comment, and like, and we'll be back.
All right. Thanks, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.